Good morning, ladies and gentlemen. Well, my beard gets shaved off next week for a good cause. It's for leukaemia research. It's a small change, self-imposed and reversible in a short period of time, hopefully. The changes that farmers face are much greater, are often imposed on them by a range of outside forces and are often difficult to reverse, or at least take some time to reverse. We often hear about the resilience of Australian farmers in the face of change. A decade of dry weather, followed by floods and cyclones, is perhaps the best demonstration of that resilience. We need to ask the question, how have farmers managed during this period, and what does it mean for how they will face future challenges? In my presentation today, I'll draw out three key themes. First, 2010-11 has been a good season for farmers in an overall sense. That's despite the weather events from November's onwards, which were cruelling what would otherwise have been a fabulous year. As someone said to me recently, mud is better than dust. Second, there has been a substantial restructuring of the farm sector in the last 2 decades that has better positioned farmers to manage changing climate conditions. But still further change will be needed. And third, while in general farm policy has encouraged and been conducive to positive farm adjustment, there are some elements that have worked against it. I want to look at what ABARES data tells us about one of those issues. So let's start with farm performance. We have seen some recovery in farm incomes for both broadacre and dairy farms in 2010-11. Farm cash income for broadacre farms is expected to increase by almost 40% in 2010-11 and to exceed the 20-year average in real terms, which is the orange line on the chart. Similarly, we expect almost 30% rise in incomes for dairy farmers, again higher than the 20-year average. Overall, farm profitability in the short run is determined by two main things. One, rain, and secondly, revenue. This year we've had high rainfall and high prices. On the price front, world wheat prices are forecast to average almost 50% higher than last season. Canola prices are 20% higher and sheep prices are up by 20% as well. Despite the higher Australian dollar, this is translating into higher prices at the farm gate. For dairy farms, while prices on world markets have risen, domestic prices have been moderated by the high Australian dollar. However, in contrast to the national picture, it is expected that dairy incomes in Queensland and northern New South Wales will actually fall due to a reduction in prices being paid for market milk in those regions. Let's turn to rainfall now. It seems that the prayers of the last 10 years were all saved up and delivered in 1 year. For the first half of the season, rainfall in the eastern states was the highest on record, creating a great basis for exceptional crop yields and very good pasture growth. For example, the wheat crop in the eastern states was 75% larger than the drought-affected average of the past 10 years. This is despite the impacts of the heavy rainfall towards the end of the season at the harvest, which lowered quality and reduced the eastern states' winter crop by about 2.5 million tonnes. So how do we know this? Well, we conducted our normal survey of farmers in the early part of the season and asked them what they expected from their crops for the year. We then phoned the same producers again in February and asked them what the final result was. And this is what they told us. So while up to a quarter of farms in the eastern states face some flooding, the average area lost across all grain farms was only about 4% per farm, with around 10% of the wheat crop lost. In addition, they indicated that over 60% of their crop was downgraded to feed quality. Again, this is in the eastern state grain farms. In combination, this will mean a large loss in farm income compared to what would have been possible. So we're still expecting an increase in farm incomes, but lower than what was actually possible if we had got the best possible result. Let's have a look at the West now. While farmers in the east had high rainfall, farmers in Western Australia suffered severe rainfall deficiencies in the main crop producing areas. This has meant a WA wheat crop which was less than 2/3 of the 10-year average. We've seen a similar story for livestock, with the weather conditions in the east enabling some good pasture growth and assisting with herd and flock rebuilding in those areas. But the dry conditions in the west have forced some farmers to sell their animals and for others to actually move them to the eastern states. This east-west disparity can be seen in the farm cash incomes, with incomes in Western Australia expected to dip below those in New South Wales, for example, for the first time in 10 years. Let's turn now to some of the changes that have occurred in the farm sector over time. And there are two main changes that I want to focus on. Those changes that have been induced by changes in relative returns and those changes which have been induced more by climate conditions. The last 20 years have seen a noticeable shift from livestock production into cropping in Australia. This slide shows the increase in broadacre farm receipts in real terms over the past 20 years and the share that various enterprises account for in those farm receipts. It shows the substantial rise in cropping from around 25% of receipts in the 1990-91 period through to over 40% now. By contrast, the proportion of farm receipts from wool has fallen from around about 1/3 of total receipts to less than 10%. This has been reflected in other ways. The cropping area planted in Australia has increased from around 15 million hectares in the last decade to around 25 million hectares now. This increase in cropping area is not because of additional land that has been brought into production. In fact, the area of agricultural land has actually declined by about 14% over that 20-year period. Rather, it is a result of movement out of sheep and into cropping as a result of the lower relative returns from wool production. This shift into cropping has meant that farms are spending far more on chemicals, fertiliser and fuel, as shown here. The second change that has occurred is more of a climate-induced change. The last decade has been relatively dry, with severe droughts occurring in the eastern states in 3 out of the last 10 years. This has placed severe financial pressures on many farmers and created pressures for adjustment. This is becoming most apparent in the composition of farm debt. Of note here, the level of working capital has increased in real terms from around $70,000 in 2000-2001 to around $160,000 last year. Now this increase in working capital in part reflects a response to drought, but it also reflects the increased importance of cropping in the systems and the need to fund capital, or the need for capital to fund crop growing and also marketing expenses. Also of interest here is the large increase in debt for land purchase. In part, this reflects farm adjustment in the sector, but it also, around 2/3 of it, has been driven by higher land prices rather than an increase in the average amount of land being purchased. If we look at land prices, the strong growth in land prices over the past decade is notable across all of the agricultural zones in Australia, and that's despite the poor seasonal conditions that we've had in the last 10 years. It's likely that some of this at least in some areas, has been driven by competition from land or for land for mining, urban and other competing purposes. High debt levels are placing an additional burden on farmers. While it only took 25% of cash income to service debt in the 1990s, in the last decade it's increased to 36%. On the positive side though, farm equity remains high, with 90% of farmers having equity ratios above 75%. Now, in Philip Glyde's presentation this morning, he made mention of the importance of reducing uncertainty around agricultural policy that potentially is impeding investment and other decision-making by farmers. During the coming 2 days, there will be discussion of a number of issues that will be important to these farm decisions, including policies relating to climate change, drought, productivity, R&D and the environment. In addition to removing uncertainty, it is important that these policies facilitate farm adjustment rather than impeding necessary adjustment in the sector. I wanted to focus on exceptional circumstances policy in this regard, and we heard a little bit about this from the Minister this morning as well. Firstly, this map shows the areas of Australia that have been declared in exceptional circumstances for varying periods over the past decade. You can see that some areas were EC declared for most of the decade, in particular highlighting the orange areas and the red areas, which each had at least 6 years or more in exceptional circumstances for most of the decade, or for the past decade. An important plank in EC assistance has been interest rate subsidies. Clearly, while these have assisted farmers receiving them to meet their business costs, they have also created several distortions in the system as well, including facilitating the carrying of higher levels of debt than would otherwise have been the case. There is evidence that debt has increased for farmers receiving exceptional circumstances assistance more than for farmers not receiving this assistance, even where these farmers were in exactly the same areas. Similarly, as shown here, land values have tended to increase at least as fast in exceptional circumstances declared areas as compared to the non-EC declared areas. Normally you'd expect areas in drought would actually face perhaps a lower rate of growth in land values over that period. With recent improved seasonal conditions, it is timely to consider alternative drought policies as is currently occurring on a pilot basis in Western Australia. It may also be worth reconsidering whether there may be other risk-based management measures that would assist farmers, noting that previous considerations of things like crop insurance have found it difficult to establish this on a commercial basis. In concluding, Chair, let me restate my 3 main themes. First, 2010-11 has been a good season for farmers in an overall sense, despite recent weather events. Second, there has been a significant restructuring of the farm sector in the last 2 decades that has better positioned farmers to manage changing climate conditions, but further change will be needed. And third, while in general farm policy has encouraged and been conducive to positive farm adjustment in Australia, there are some elements that have worked against it and will require further attention if farmers are to meet future challenges in an effective way. Thank you.